For the UK economy, the EU membership vote in June is clearly the main source of uncertainty right now. It is difficult to estimate the exact economic impact on the UK economy if they decide to leave, as it will depend on the exact conditions that will be negotiated upon. Trade agreement, which is tariff barriers, but also non-tariff barriers, such as passporting rights, which is going to be very important for London banking sector. Both UK and the EU is interested to have favorable trade conditions, but on the other hand, the EU will have to signal to the world and to the other countries that exit is not without consequences. So Euromonitor International has created a macroeconomic scenario of Brexit, which I would like to introduce now. Under Euromonitor baseline scenario, we expect UK GDP to grow by around 2% in 2016 and 17 and continue at around 2.3% annual growth later on. The unemployment rate is expected to stay below 5.5%. Inflation is likely to gradually increase over the next couple of years, but only reach 2% target by 2019. And as the economy strengthens, the interest rate is likely to climb up to a more normal level of 2%. If the referendum will result in UK exit, the GDP growth path is likely to look more like this. Estimates by Euromonitor macro model show long-term GDP decline of 2 percentage points relative to a baseline. The unemployment rate would rise to 6%. Inflation is likely to climb above the 2% rate within 2-year horizon due to depreciated pound. And the effect on interest rate would be downward as a reaction to weaker economic growth. Currently, alone the uncertainty surrounding the EU membership referendum is already having an effect on the UK economy. Business confidence levels have been declining since the end of 2015, and this has already had an effect on UK business investment, which has slowed down lately. The British pound has reached the levels last seen during the financial crisis, and this is also mostly related to the possibility of Brexit. If the UK voters decide to stay in the European Union, this uncertainty is most likely going to vanish, the pound will probably rebound, and business confidence is likely to improve. While if the decision is to exit, then as the negotiation about exit conditions takes place, this uncertainty is definitely going to stay and continue to have negative impact on the UK economy for another year or more.